Thank you so much, Tijani, for taking the time out to join us today. Now, we've seen in the last couple of weeks, we've seen higher fixed income yields luring equities investors away from the equities markets. But it looks like the market has been able to muster some gains just a couple of months into June. Probably still too hard to say. But does that change your forecast for market performance in H2?
Yeah, well, thank you, Sarah. Good afternoon to you. So, in terms of our expectations, we haven't seen a significant drift from what we hope to the market to see, even though with regards to what is currently playing out, if you compare our projections within last week and this week, you see that the market, while there's been quite a handful of bargain hunting, you still see that the market is actually coming back to as we projected. Away from the insurance and the banking subsector, you can see the uptick moving the market away from 38,726 at the closure last Friday to 38,801 as of yesterday. So it hasn't, we're not seeing any significant trade from what we projected.
Now, speaking about the bargain hunting, let's talk about some of the best performing sectors this year, and that will be the oil and gas sector. I think about 15% so far. Now, we've seen news around the Dangote refinery, and just very recently, the Senate president saying that the petroleum industry bill will be passed before the end of this month. So just your thoughts on this bullish run in the oil and gas sector, what investors are expecting, and just looking at the fundamentals of that sector.
Of course, quite obvious. One of the expectations is the positive impact which the market is expecting or hoping to realize on the part of the PIB bill disbursing. And then, of course, that's in addition to quite impressive reports that has been churning out. If you look at last week, we saw corn oil Q1 2021 in the unaudited financials recording a 13.24 year-on-year decline in bottom line, while the bottom line advanced by over 62%. So these are other variables. Our expectations in the oil and gas is quite a handful. We see that there's a lot of reaction, and the volumes are pulling out, and you can see that the market is reacting accordingly to see, even though other side of the market, we also see profit taking, be that as it may. We think these variables will play out such that investors hope to see so much positive coming out as a result of this PIB bill coming down and these impressive results along together.
Now, what about the banking sector, the most liquid part of the market? What is your outlook on this sector in terms of earnings? Revenue projections. We're seeing higher yields now, government securities, but of course we know the central bank is looking to these banks, to be better financial, to lend more to the economy in terms of credit going into the real economy to boost growth. But what are your projections in terms of how they're going to perform this particular function while also trying to raise earnings margins?
All right, as you can see, the banks, of course, are trying as much as they can to put into the LDR expectation of the CBN in terms of credits. We've seen that quite a handful of them, especially the FUGAs, you can see that in terms of credits, you can see that they are all struggling to ensure that they stay abreast of what CBN's expectation is. In terms of the market expectation, regardless of the bargain hunting which has happened, which even you can see what happened yesterday as well, making the insurance, making the banking alongside the insurance to have it's with downward pressure. Our projection is that, of course, it will come positive as much as these banks are able to grow in terms of this credit, and we hope that this will pan out in the bottom line. And we're hoping to see more progressive earnings as the second year approaches.
Okay,
second part of the year approaches.
For the consumer goods index, it's up about 3% since April quarter to date. Now, we know that there's been a continued pressure on the consumer wallet, rising inflation, food inflation, and we're seeing more and more companies trying to adjust. And by that, I mean, them focusing more on the sachet, the sachet economy. I don't like to use that phrase, but it would appear that that's what we're seeing. But just your thoughts on how things are developing in that space.
Oh, well, we see that obviously consumers are trying as much as they can to adjust to the reality of recent times in terms of inflation. And that's what has happened to the kind of products that's also being delivered to the market. We are hoping to see that with time, while investors are reacting in the short term, we do not see significant deviation from what the earnings projections of these companies are. You can see what happened to Dangote Cement. Of course, the buying interest on these heavyweight tickers, particularly the Dangote Sugar, for instance, and that's why quite a number of analysts are still seeing these positive sides, even though it might take a little bit of time for consumers to adjust. Still hopeful, and that's why the sector is still as buoyant as it is, and we're hopeful to see them turning out improved earnings as investors try to adjust to the market realities in terms of the products, inflated prices.
Talk to us about the stocks that you like at the moment, those stocks on your radar, and talk to us about their fundamentals and perhaps, if they're good entry points for investors who may be interested.
All right, for investors who may be interested, if you look at these subsectors, we look at the likes of Dangote Sugar, BOA in that sector. And if you look at the consumer goods, the likes of Dangote Sugar, and then of course, if you look at the insurance, NEM, you can custodian, you can see the kind of earnings it's showing now, the kind of dividend yield, even though the market had expected that much better performance would be. Of course, in the banking, we'll see earnings potentials and earnings in Access Bank, IBA, GT Bank, Stanbic, and a host of them. I think this is the direction in terms of what the market is looking to in terms of the periodic earnings that the market is hoping to see as we move forward.